Such a volatile session, and that comes to a close with the weekly gain, or rather loss actually, for the index by about 1%. But you've seen it all, 54.50 on Friday, 52.75 as well.
Yeah, I saw it on the currency and saw it on the equity markets. Thankfully, Thursday and Friday showed some bit of gain. So we end the week with a more respectable number than what we would have otherwise. We got two experts with us. On the fundamentals, Devin Choksi, MD of KR Choksi Securities, joins us. As on the technicals, it's Sandeep Wagle. Thanks so much for joining in, both of you. Just a quick word on the charts and the movement, considering this expiry next week, Sandeep. What do you think we do? Because 2 days of gains for the index, do we do more?
Good evening, Neeraj. I think we have made a temporary bottom or a short-term bottom at 52.50. And having said that, I would talk of a limited upside, which is another 50-70 points, 5500, 55.50. The Nifty heads into a very strong resistance area, which I personally feel the Nifty will not be easily able to cross that. So broadly, we are in the range of 5300 on the downside, 5500 on the upside, and for the next week or so, we'll move in this range. And the next week is an expiry week, and also it is the month end, and there the monthly charts will be very, very clearly conclusive whether we move ahead, we stay in this range, or we break 5200 and go down. Somewhere I feel that at higher level selling will come in, and in case we are not able to close the month above 53.50, then again we are on the way down, and then this time 52.50 will not be the bottom. The bottom could be much lower than that, which could be somewhere around 4900, 49.50, and this is a view for the next couple of weeks' time.
The other talking point, or I should say the talking point this week, was also the currency, which touched record lows of over 65.56 this week, and then finally on Friday rebounded close to that 64 mark. Devin, what is your sense? Does it seem like along with the currency, the equity markets as well, at least in the near term, may have bottomed out?
Well, I think not too sure whether I think one could say that I think it has completed its fall, I think, because right now the market is also in the grip of operators. Let's understand the currency market. And I think the kind of actions which are coming in from the government side and the RBI side, they are far too little, and I think they are coming in a scattered manner. I would rather imagine, I think, these actions coming in a proper manner in which I think both RBI and government, I think, take decisions together in basically bringing the currency fall, I think, into the account and probably, I think, arrest it. On one side, Finance Minister has talked about doing a right math by way of, I think, swapping the currency with the other nations, and in turn bringing down the current account deficit, which is a good move. But at the same time, I think on the other side, the RBI also must take corrective action. I believe that before the Fed starts tapering off the QE, before that I think the RBI should, I think, start slashing down the rate of interest. If that happens, then probably I think the inflow of money could happen faster, because that would signal the growth in the economy. And these are the two measures which are simultaneously required to take on, not one after another. And if that happens, then probably you would also see the stability into the equity markets, because equity markets today, wherever the portfolios are packed with the dollars, at that point of time I think the rupee slips, and probably I think they would start facing the algo trades immediately and sell-off starts taking place. So I think these are some of the intricacies which one needs to understand, and then probably take corrective actions immediately and not in isolation.
Sandeep, what's the call now on the Bank Nifty?
Well, I think the Bank Nifty and the Nifty are almost on par with each other now. There was a time when the Bank Nifty was a shade weaker or a shade stronger. Both has happened over the last 2 weeks. But I don't think the Nifty will go up and the Bank Nifty will come down. I still have a view of 8700. Probably on the upside, 9600 before that is a possibility. But at higher levels, I don't think 9650, 9700 will be able to, the Bank Nifty will be able to cross with conviction at a current level of 9400, 9450. So maximum 150, 200 points on the upside, which I would still look at a selling opportunity.
Devin, just wondering, what about some of the NBFCs like PFC, REC or an M&M Financial? They have cracked, but they are looking to now slowly inch their way upwards. Do you think these can recover very early?
Well, I think that should be a possibility, I think, for sure, because I think the tight monetary policy adopted by the RBI has ultimately, I think, impacted, I think the victims are more, I think, those people who are buying the bulk deposits. And I think some of the NBFCs are into this bracket, I think, who have been buying bulk deposits. So obviously for them the cost of deposit is non-remunerative. Given the kind of possibility that the new RBI government may adopt, I think, the growth path, and given the possibility that he may probably bring the sharp fall in the rate of interest, quite possible that I think this entire tight monetary policy would start getting reversed sooner than later. And in such kind of a situation, I think the kind of dark cloud which is hanging on the head of most of the NBFCs, I think, would probably start disappearing or dispersing. So in such situation, I think you may probably find that I think the kind of perception impact on NBFCs, I think, may probably also become relatively more positive than otherwise. And then in that case, I think you would probably see, I think, most of the NBFCs returning back to some kind of a proper valuation. Today, many of the NBFCs have come down to just one-time price to book value valuation. I think that could probably improve by at least 15-20%. So I think you could possibly see that kind of an upside going forward in many of the NBFC names which you just now mentioned.
Sandeep, identify one stock from the metals names wherein you can still buy and make money.
Aisha, this is a little difficult to answer because yes, you can make money, but that comfort of buying what was there last time, I would still go with a Tata Steel. That is a stock which is not corrected in any which ways. JSW Steel corrected, Hindalco corrected. But the way Tata Steel has closed, I see some more upside. The only problem being this stock has moved up from 230 and to almost 280 in just 1 week, and though I see a level of 295 or so, the risk to reward does not match. That is the only problem. But some more upside at Tata Steel is the best stock in this space.
Deven, this would be the top newsmakers probably, FT and MCX, and lots of news flow doing the rounds. What do you do with these two stocks?
Well, anything I think that one needs to do with these two companies, I think one has to take, I think, little larger perspective. Then only I think one could buy into this company if one wants to buy. Obviously, I think the MCX offers a better opportunity, I think, at this point of time, more because of the exchange-based model and the franchises created therein. You probably have prospects of, I think, the entire ownership of these exchanges coming under the fold of some entity which the government is indicating. So to my mind, I think if they are very serious about the exchange ownership given to the distributed players, institutionalized players, then in such situation, I think the re-rating could take place going forward and the revival of the business in the exchange could happen sooner than later. Given that kind of a possibility, I think the choice would be with MCX to buy. But whether I think would want to buy in an uncertain environment, I think one would require to stay on with the investment for longer period of time. That much I would like to put it across. Any investors taking a call here, I think they must stay on for the longer period of time because the positive aspects of it would get reflected only after, I think, some kind of structural changes on the ownership side takes place from the government of India side.
In fact, we at ET now learn that the EGOM on gas allocation has decided to maintain status quo. The oil ministry is looking to divert new gas finds over next 3 years to now the power sector. 11 mm SCMD over the next 3 years is going to be diverted to the power space. All additional gas from new discoveries is going to go to the power sector. The EGOM on gas allocation, just to remind you, has decided to maintain status quo on priority. Deven, your first reaction on this news?
Well, I don't know. I think I'm getting too many, I think, policy actions coming in from the government side, at least on this space. Every second day, I think they have a different story to tell. And when I think such kind of policies, measures are taken with such a frequent, I think, speed, one finds it very difficult as to how do you pick up the investment, how do you, I think, stay invested in this space. Honestly, I think we believe that I think at this point of time, I think the gas allocation business is not becoming very smooth for anybody to understand. Rather, I think than to speculate on any aspect, I think one would stay safely invested with company like Reliance, which is, I think, having larger part of the gas generated outside the India than within India. So I think I would rather stay with Reliance and be happy instead of, I think, getting into this kind of a policy rigmarole which keeps on happening on a day-to-day basis.
Quick preview, really, not a preview, but more sort of estimate for Q1 GDP, which releases next Friday. The expectations are that it will be around 4.6 to 4.8% versus 4.8% on a quarter-on-quarter basis. I think the consensus estimates range between 4.5 in fact 4 to 5.3%, let me put it that way, which will be sharply lower versus Q1 FY13, mind you. but on a QOQ basis would be flat. Agri and services sector will support the growth. It's obviously expected that industrials will not do well. IIP has pretty much shown that hand. So just keep in mind, this will be probably a big news maker towards the end of next week, but something that will have a bearing on the weekly trade next week as well.
Okay, let's chat about what stocks and trades you should execute come Monday morning. Sandeep, start off with your trading calls.
Aisha, I have a buy in Tech Mahindra, stop loss of 1340, target of 1440, and a sell in ACC. I would use every bit of a up move or a correction, upside move to go short or sell ACC. Ideal selling range is 1010 to 1030, stop loss of 1060 and a target of 900.
Okay, watch out for some of those names, ACC in particular, something that Sandeep has been on top of ever since it started correcting. A bit of an uptake may continue into expiry week as well, but generally is this a good time to advocate stocks? Are you doing something like that with your clients?
Well, Neeraj, I think the investment activity continues in a market like this as well, and we certainly look around for opportunities in good quality stocks. I think the investment is to be very selective. It cannot be generalized. But at the same time, I think few stocks where we find ourselves more comfortable buying into in the market and a corrective market. One would be LIC Housing Finance. The stock is pretty much available at price to book value of 1. So I think downside is limited. The growth rate continues in the vicinity of around 29-30%. I think so it is giving me a larger amount of comfort. For those of us, I think, who are also looking at dividend yield in this kind of a situation, that is also available at around 2.5%. And all the same, I think the kind of impact which it carries because of the unavailability of the wholesale deposit stroke, I think costly wholesale deposits, I think that could possibly recede as they start bringing down the corrective measure on the banking rate side. And if that happens, then probably I think this stock holds the prospect for an upside. I have kept the buying levels, I think, somewhere around between 154, 55, 256 levels as a downside support for this stock. So in market like this, I think if you get an opportunity like this, one could take a call and buy this stock into the portfolio. Of course, I'm investing for longer time. I'm not trading for short term.
And Devin, just wondering, there was some bit of a fight back by IT. In fact, Tech Mahindra or a couple of others did very well. Is there a stock that you like in the tech space?
Within a mid cap, I think we like something which is not very expensive, at the same time has a huge potential in upside. It's called company called KPIT Cummins. The company is basically, I think, more on the embedded technology side, and that too, I think their focus vertical is in the automobile and the automation within the automobile. So from a perspective of buying this company from a longer term point of view, where I think few more patents which are likely to get rolled out at some point of time in form of a product, which is, I think, going to drive this company. And that we find that, I think, having got this company at a valuation which is close to, I think, 10 times price earning ratio, I think one could possibly have a larger amount of margin of safety and a good upside going forward in this company. So pick up, I think, this company from the mid-cap space and investment portfolio. Any fall would be, I think, additional opportunity to buy with a comfortable margin of safety.